This investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-presented by Canara Bank. Together we can.
Good morning and welcome. Here with us here on Business Today, I'm Aabha Bakaya. We are heading into market opening. Let's take a look at what's hot in the financial and corporate world this morning. Tech stocks on Wall Street fall for the sixth straight session on fears that AI could make many finance and legal roles unsustainable. $830 billion wiped out from the S&P 500 software and services index in 1 week. Asian stocks are also down, with the tech-heavy Korean index leading the losses. Tech shares again in the spotlight after yesterday's sell-off, but the pessimism on Wall Street and Asian markets indicates the worst might not be over, with traders reportedly building fresh short positions. FPIs were still net buyers on Wednesday, but just about. Traders are also waiting for the RBI interest rate decision tomorrow. Markets overreaction. That's what Tech Mahindra's CEO Mohit Joshi calls the 2 lakh crore rupee wipeout in Indian IT stocks yesterday. In an exclusive conversation with Business Today TV, the tech industry veteran emphasizes that AI will ultimately act as a tailwind for IT services and software companies rather than replace them. In its first ever statement on Russian oil imports, the government says its supreme priority remains ensuring energy security of 1.4 billion Indians. Commerce Minister makes it clear that all diversification of energy sources will keep this in mind. Competition Commission of India orders a fresh probe into mass flight cancellations by Indigo 2 months ago, says the carrier enjoys a position of dominance with an appreciable adverse effect on competition. Adds that consumers were effectively locked in and lacked viable alternatives in face of the cancellations. Well, the sell-off in silver continues. Massive selling coming in this morning, with COMEX silver plunging in the past hour. Silver futures are down nearly 10%, as you can see on your screen. Silver prices are down 16,000 rupees in India. MCX gold prices down 4,000 rupees per 10 grams. That's the kind of volatility you're continuing to see on these metal prices. It's a global sell-off that we're seeing in the silver COMEX. In the past hour itself, we're seeing silver futures down about 10%. And silver prices here in India, 16,000 rupees lower currently. MCX gold down 4,000 rupees per 10 grams. We were looking at some of the reasons for this, and some analysts are saying that the volatility is essentially the markets trying to find a new price for silver. It's adjusting at this point of time, and that silver doesn't historically follow distribution of returns the way many other financial models assume. So it sees a far more extreme reaction. We'll talk to some of our experts about it in just a moment. But saying that avoiding silver because of this volatility could be a mistake. It's just often required to resettle, reprice, and then move ahead, in a sort of sustained manner over time. Let me go across to our guest this morning. Gaurang Shah is joining us, Senior VP, Geojit Investments. Gaurang, good morning. Let me get your take on the kind of volatility that we're seeing on precious metals, particularly silver.
Thank you so much, Aabha, for having me on the show. Good morning to you and my good friend Shell and all the viewers of India Today as well as BTTV. A small disclosure, Aabha, because we'll be going into stock specific, that all recommendations I'll be sharing this morning on your show are part of our fundamental long-term research team recommendations, our company Geojit or myself. All right. We do not have any kind of personal investments, no financial interest, no conflict of interest, but share our advice to our clients on similar lines. They might have their investment interest. So, Aabha, let us understand one thing. This correction in silver, gold has come after a phenomenal 200% plus rally in silver and maybe about 80% plus rally in gold. I don't think that, the long-term fundamentals have changed as far as precious metals are concerned. We always advise to our clients that you should diversify your investment into different asset classes to hive off the risk and distribute that. So and not to forget, Aabha, from 4 lakh rupees, silver prices have corrected. There was a lot of speculation position that was built up not only in commodity market but also in ETF market. So this is virtually a sign of all those traders or short-term traders who are not able to fulfill the commitment as far as mark-to-market is concerned. No doubt there could be a little bit more pressure unless we have these positions getting squared off as far as speculative position is concerned, but the long-term fundamental remains intact as far as gold and silver is concerned. As it is based, this advice is based on certain reports that our commodity team has come out with and other reports that we have read.
All right, fantastic. Thanks for putting that in perspective, Gaurang, because clearly what's on everyone's mind. Meanwhile, the other route, of course, is on IT, and Tech Mahindra CEO and MD Mohit Joshi has termed the recent sell-off as a clear market overreaction. Let's listen into that conversation.
Claude just came out with a new plugin for legal services yesterday, and I certainly feel that it looks like a significant market overreaction. As you know, the market has been skittish about the impact that AI will have on SaaS companies. So earlier, the impact was only on the IT services or the consulting companies, which had seen drops in valuation. Over the past couple of weeks, that contagion appears to have spread to the SaaS companies as well, with the fear that AI will replace SaaS companies and services. As we discussed, we feel that there is a significant amount of work that still needs to be done. At the end of the day, this is a technology shift, and every single technology shift in history has proven to be a tailwind for the services and for the software business. There is still a lot of work to be done to move applications to the cloud. There is still a significant amount of work to be done to get the data estates in order. There's a huge amount of work to be done from a simplification and modernization perspective. And we feel that if AI really has such a remarkable ROI, will clients not invest more to implement AI? Will clients not invest more in use cases? Will clients not invest more to get their data estates right?
And right now the productivity, the best number that I heard was like up to 25%. And people have given me lower numbers also in terms of ROI within a company.
And the productivity really fluctuates very widely, right? So if you're talking about a greenfield estate, let's say you're building a new IT estate from scratch, there you could have very high productivity. It's all new architecture, new languages. But if you're talking about a legacy estate, which is what 99% of the estates are, the productivity numbers are much more modest, right? So I do feel that this is a market overreaction to a very specific piece of news. It certainly appears to have been very widespread, right? So we had Accenture and IBM and Cognizant drop off by 10% yesterday, but we also saw a huge impact on Salesforce and ServiceNow. It seems like a huge market overreaction to nothing that has really happened materially over the past 2 weeks.
All right, we're just coming down to market opening as well, and it's about a minute to go right now. We're seeing a huge downtick on metals as well. So precious metals, the metal index is also looking incredibly weak. So profit booking perhaps continuing there, as Gaurang also articulated. And if we go a little bit deeper, we'll also question maybe the demand scenario and understand how the market is reading into that post-budget. But there's the opening bell for you on your screen. 80 points down on the Nifty on opening bell. We've got 25697 on the charts. Let's pull up some of those gainers and losers for you to understand exactly what's going on. IT is kind of flat after the rout that we've seen. And at this point of time, just pulling up the Rupee as well. Nifty 50 is recovering slightly, I think, so still down about 50-60 points. And we'll also pull up some of the gainers and losers. The metals is where the heavy pressure is coming in. Cipla, NTPC, Power Grid, a few gainers, a little bit of a smattering there, 0.5% higher, a touch of auto. Let's pull up the losers list. Where's the pressure coming from this morning, and take a look at that as well. That's clearly on the metals front. So, Shell, let me bring you in on this, because I know we've been tracking the consistent up move on metals, but today definitely some amount of profit booking that's taking place and setting in.
Fair point, Aabha. Good morning to you and to my dear friend Gaurang. I think this is all par for the course. I would focus on stocks in the energy space, in the CPSE index, in the PSE index, and look forward to buying them at support levels. As also the PSU banking setup, any dips there should be taken home. That's the setup, and so be it. So far, advances are ahead of declines. So 1,000 shares in the green, 700 in the red. The top gaining index is the auto space. Nothing much to talk about here. But this is, the beginning of the day.
Shall, if I go back to the metals and actually just focus on the market reaction for a moment. Let's pull up silver Bs as well. That's down about, I think, 13% is what my producer is telling me. Let's just pull that up on the screen. So just want to focus a little bit on the market reaction that's coming in. Even if it's profit booking, the fact of the matter is that if you're a retail investor and watching your TV screen right now, you would probably be concerned about the kind of extreme moves that you're seeing this morning. It is definitely profit booking setting in, but yes, seeing those double-digit cuts on your screen can be a little unsettling. So we'll ask Gaurang about this again to further elaborate on it. But Hindustan Zinc also down about 5% right now. Hindustan Copper also down. So yesterday we had this huge rout in IT, primarily on what we were seeing in global markets and concerns around AI. But today it's all about metals, and that's where we're seeing the rout. IT in fact is settled and it's just about recovered or flat in the green at this point of time. Gaurang, coming back to the metals, so it's not just gold and silver. It's across the board profit booking that we're seeing this morning.
So Aabha, look, along with precious metals, we had a decent rally in metals pack also, whether it is ferrous or non-ferrous. So I'll again like to reiterate for the benefit of all your viewers, if you are an investor, either in precious metals or in metals, be it the ferrous or the non-ferrous side, you need to have a little bit of elevated risk appetite given the kind of rally that we've seen in precious metals over the last maybe about year plus, and metals in the last maybe about couple of weeks and months. The undertone for metals pack, ferrous and not ferrous, as far as domestic side is concerned, remains absolutely robust. And there is also a possibility that there would be upward revision on the prices of flat and long products over a longer period of time. There is also a tailwind addition, Aabha. The input cost has gone down, so your profit margins are going to expand. And of course, this kind of positivities in terms of trade agreements with UK, other nations, with European Union, and of course detailed contours of what has happened between India and US trade deal will send a positive signal for this particular sector. Focus in the budget as far as infrastructure creation is concerned is also very well elaborated and a verbatim given by the Honorable Finance Minister in the budget. Yeah. So domestic demand is going to look robust. Real estate sector is doing well. Over there again you will see positivities. Capex in private sector picking up. We'll see a positive tailwind for the metals pack. So have a 2-year plus kind of horizon. Don't get carried away by this short-term volatility and take a decision to exit, whether it is precious metals or whether it is ferrous, non-ferrous metals. Long-term positivities remain. I'll give you certain names on which our fundamental system is positive. Tata Steel, JSW Steel, Jindal Stainless, Hindalco, Vedanta, NMDC and Nalco. These are some of the names from a long-term point of view on which we are recommending investment with a 2-year plus kind of time horizon.
Okay, fantastic. I just also want to go through some of the earnings reactions coming in. We've got, I think, JSW Cement is moving higher, and I'll run you through a few others. Apollo Tyres has reported Q3 earnings. We've got Bajaj Finserv also reporting earnings. Those are pretty much flat. So JSW Cement is up 6% on earnings today. Century Plyboards, let's pull that up as well. I'm just spotting some of these to see where the reaction's coming in. Emami is a beat. Let's see if Emami is reacting to earnings this morning. And Cummins is a miss. So a couple of other earnings reactions there. Emami's up 4.5% on the back of earnings this morning. NHPC, Metropolis is a miss as well. So let's pull that one up. I mean, the profit's gone up 32%, but let's see how the street's reading into those numbers this morning. And Trent as well. Let's pull that up. Net profit up 36%. That's a beat on estimates, 546 crores. But market's not reacting to that numbers positively because Trent has also seen a a pretty substantial run-up. Team Lease also reported earnings, net profit at 41.7 crores versus 28.4. Let's take a look at that one. And MQ Pharma Q3 PAT has jumped 48% as well. That's a phenomenal surge that we're seeing on MQ. Let's pull that up and take a look at that one as well. So whole host of earnings reactions, but some of these stocks have seen a recent run-up, so we may not be seeing an immediate reaction to some of that earnings commentary. From some of these names, Gaurang, anything that you were tracking on the back of earnings and revenue guidance going forward?
Well, there was a long list, Aabha.
Yes,
actually,
I know.
missed some of them, to be very honest.
Anything that you're tracking on earnings, yeah.
Well, so I think, with the positivities of trade deal and with the positivities of a deal done and dusted with the European Union and the positivity of course, US-India trade deal, I think auto ancillary looks really attractive.
Okay.
Uncertainties, though we need to know the details of the deal, which I guess both the counterparts will address and make a statement together for the details. But yeah, auto ancillary looks very attractive. Other than that, I think renewable energy space looks quite attractive. Specialty agrochemicals, I think there is a positive tailwind over there. And overall, Aabha, we did discuss this, the entire BFSI segment, whether it is public sector bank, private sector banks, or strong NBFCs. All these, sectors look very attractive. My only request to all your viewers is don't take any speculative trade before you know the contours of this US-India trade deal. Wait it out, let the details come through. Okay, if you want to, even if you get to invest at a little bit higher level once the deal is known, it is always better to have clarity rather than make any speculative trades. Got it.
Just pulling up BHEL for a moment, has secured a 1,200 to 1,500 crore project from Hindalco. So that's BHEL. And we've got HAL, of course, seeing a downgrade from Morgan Stanley. We've been talking about that. I just want to touch upon it for a moment. The BHL is down about 1%, and just want to see if HAL is continuing to see some amount of selling coming in as well. Talking about orders and momentum on that front. Both of them have. BHL has of course secured an order, but not much of a move today, and HAL seeing itself being left out more recently on one or two large tenders. Now, he's considered the most powerful businessman in the world, and Larry Fink, the CEO of BlackRock, who controls an estimated $14 trillion in funds, says the next 2 decades are the era of India. He was joined by Reliance Industries chairman, Mukesh Ambani, who says he can easily see 100 Reliances in India's startup ecosystem.
When I interact with startups and we see young 28, 30-year-olds starting up companies, and I can clearly see, 100 new Reliances in terms of where and the aspiration, the confidence that they have. And finally, it is the confidence that you see. Fortunately, we now operate across the length and breadth of India. So it's not only the confidence in forums like this, but when you see the confidence in young people going to school and colleges, wanting, and in parents today believing that their tomorrow is better than today.
It's not about, about tariffs or President Trump or anything else that's top of mind. We need to be compelling people to think about the horizon of investing over a long period of time, to grow with the great companies of India, to be a part of that, and to participate in that. And I'm absolutely convinced, if you believe in that, in the era of India, we need to compel hundreds of millions of Indians to invest alongside the growth of India. And that will actually transform India in so many ways, because as more and more families invest alongside the growth of India, India has less needs for the importation of capital.
All right, that's Larry Fink, and talking about the kind of opportunity here in India. We've got NGL Fine Chem on earnings, also seeing a huge reaction. Let's just take a look. I think it's, 12% up, net sales at 126 crores. That's up 45%, and so seeing quite a big reaction there on that one. It's actually been giving about 40% returns in the last 6 months and 14% over the last 2 months. So this one seems to be on quite the tear. Shell, in terms of some of the other movers from the broader markets, what are you spotting?
Well, Aabha, at the moment I am tracking the downturn in Hindustan Aeronautic. It's now down 5%. You mentioned the downtick from Morgan Stanley. What's also worrying is that the much delayed LCA MC1 delivery, which was supposed to happen in March of 2025, is delayed further. So that's the immediate reaction that's coming on the stock. You have Force Motors doing very well, 7.5% higher, 21,535. You have Pokarna doing pretty well, and of course the chemical space that we had pointed out 2 days ago, especially NGL Fine and many other chemical stocks in top shape. That's the Indo-US trade deal impact that's coming in.
Fantastic, Gaurang. You know, I want to ask you, with the duties being cut, which luxury car are you buying in the next few months?
I'm quite happy with the Indian ones, to be very honest. And these cuts are yet to come through. It will take a while, but yeah, I mean, you know, I have always been a big fan about Indian automobile manufacturing companies. No doubt, I mean, you have the niche and the marquee names of the Maseratis and the Mercedes and the Audis and the BMWs and many more names. But my sense is that Indian vehicle manufacturing companies are also no less. We stand very, very tall. So I'm quite happy with my Indian brand that I drive around in Mumbai. But yeah, I mean, in terms of competitiveness, in terms of advantage, pricing lower, and the statements made by various automobile manufacturing companies, heads, sales heads, HODs, this is going to open up a lot of opportunity as far as foreign brands are concerned into India, with the price tags getting lowered to a decent lower level, Aabha. But not that the Indian vehicle manufacturing companies are going to have a negative impact. I think there is a lot of sustainable demand in India. So there is an opportunity for all these players to coexist.
Great. Let's also hope we build that many more roads and highways to keep up with all those cars. Gaurang, thanks so much for joining us this morning. Shell, thank you as well. We'll leave it there. We'll be back, of course, at market closing. Thanks so much for watching.
Presented by National.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, ladies and gentlemen. A warm welcome to you on this wonderful day on Dalal Street, where markets to some extent are starting on a back foot as far as the metal space is concerned, and in particular all stocks related to silver, where you've seen heavy profit booking happening in not only silver ETFs but the underlying metal as well. Therefore, you see a downtick of 12% on silver Bs at 233. Hind copper is 2.9% lower. You have a dip coming into stocks such as Hindustan Zinc and MCX as well. These are all related to the metals trade, and of course the Nifty Metals Index is at this point of time the top loser, down about 1.8%. The mood is slightly on the back foot as far as the Lal Street is concerned. When you look at the top traded counters, you all see weakness in gold Bs, in silver Bs, in silver ETFs, so on and so forth. But there are pockets of strength, and in particular the kind of short covering or value buying that you are seeing in the IT index. Look at Infosys up 0.3%, look at Wipro up 0.4%, TCS, HCL Tech in the gains. Nilesh Jain joins us. Let's look at his view from the market. Namaste Nilesh ji, a very warm welcome. How do you see at this point of time the move that we are seeing on the Nifty down 64 points?
Very good morning to you, sir. Good morning, everyone. So first of all, if you look at the Nifty's overall structure, in last two sessions, we have seen some bit of positive development. That was on a support side. If you see the 100-day moving average, which is currently placed at 25,650, and in last three sessions, Nifty managed to defend the same on the closing basis. So that's the only positive I can see as of now on the chart. We did see a gap up opening on 3rd of February. That gap area is also acting as a very strong support. On the upside, the breakout is awaited, I would say, that is placed at 25,800. If Nifty breaks above 25,800, then certainly we will see the levels of 26,000 to 26,200 as well. So as of now, looks like more sort of a range bound, 25,600, 25,800. That's the broader 200-point trading range. If we see any dip towards 25,600, that can be used as a buying opportunity. And if it breaks 25,800, then we'll get a confirmation of a follow-up on the upside towards 26,000 plus.
Fair point. Any stocks that catch your attention on the charts, or either on the long or the short side?
Right. So on the long side, M&M Finance, this particular stock is looking attractive at current level, given the kind of rebound that we have seen. We have seen a fresh buy crossover on MACD as well. So M&M Finance looks positive for a follow-up on the upside to continue towards 395 to 400. Stop loss can be placed at 368, and M&M Finance is a buy.
Okay, fair point. That's a view coming in. Ladies and gentlemen, a fairly strong movement coming into the IT space. Now, whether it's value buying or covering of short positions from what we saw yesterday, there's turmoil that's continuing on Wall Street with the introduction of a new artificial intelligence tool that is supposed to drive business away from traditional software services providers. We've seen a massive selling coming on Wall Street, many of which is getting reflected on the IT space here. Nilesh ji, in terms of technical charts, where do you see support on Coforge and Persistent?
Well, Coforge and Persistent, in fact, Coforge specifically, this stock yesterday made a low somewhere around 1566. So that's the immediate support I can see on the chart. And below that, if it falls, then there could be possibility of another leg on the lower side. So overall, if you look at the broader structure, right now, Coforge is trading below its all long-term and short-term moving averages. We did see a gap down opening yesterday. So multiple resistances on the upside, and downside seems like open up for 1580 to 1560. The major support that one should keep an eye on is placed at 1500. If it breaks 1500, then it will be considered as a structural breakdown. But yes, there could be possibility of some bit of a pullback from current level, but not looking that promising at current level. Similarly, in Persistent, in fact, Persistent comparatively a better place because it is trading well above its 200-day long-term moving average, which is placed at 5760. So that should be the stop loss for the long position, and we may see a pullback more towards 6,000 to 6,100 as well.
Okay. In terms of top gainers, ladies and gentlemen, let's look at what the NSE 500 is flashing. You have IFCI in strength 4.2% higher, IDBI up 3.1%. M&M Finance, something that Nilesh has just marked at 2.5% higher. Imami post earnings showing strength 2.7% higher. Remember, Imami also shot up yesterday in trade but was met with selling pressure. ITI Limited from the PSU basket in strength 1.9% higher, and of course Chennai Petro 2.7% higher. So these are stocks that are doing pretty well. Hindustan Petroleum in strength as well. So it's the PSU, PSE, and especially the energy space that is in strength. A view that you would have, Nilesh, on the PSU basket or the energy basket, what are the stocks that you think are in strength?
Yes, before that, I just want to highlight one particular counter that you have just mentioned, that is Chennai Petro. This counter, in fact, has given a fresh breakout, so just came on my radar as well. So given the kind of a breakout that we are witnessing today, I believe there has to be a follow-up on the upside towards 930 to 950. So keeping 885 as a stop loss, which is somewhere around today's low, and keeping that as a stop loss, one can go long in Chennai Petro for upside target of 930 to 950. So that is particular counter that is looking positive. So within PSU banking space, we are also bullish on the PSU banking basket as a whole. So Bank of India, this particular stock is looking promising at current level as well for upside target of 170 to 175. One can keep a stop loss below 158 and one can go long in Bank of India. Apart from that, index heavyweight stock, that's State Bank of India, we are also bullish on this particular stock as well for 1100 plus kind of a target. So one can keep a stop loss below 1050 and SBI also looking positive.
Okay, 102 points down on the Nifty at this hour, down 0.38%. You have weakness which is creeping into the metal space, now down 2.1%. The realty index slips 1.4% lower, and of course you have weakness in the auto space, MNC space, pharma space. Is there something that's hitting circuits on the longer side? Yes, NGL Fine now 11% higher. Look at how JSW Cement is reacting, 8.2% higher. Let's look at value as well as a price uptick. So Force Motors 5.9% higher, 5.6% higher, already 248 crores traded. Devyani International 6% higher, 125 crores traded. You have Ever-Ready Batteries 5% higher, 4 crores traded. These are the gains that I can see in terms of new highs. Are there any? Well, yes. IOC, BPCL, Bharat Forge, and Tamil Nadu Mercantile Banks. These are the ones that are catching my attention at this point of time. And of course, how can you forget the CPSE ETF, now very close to 3 digits for its first time in the life. That's how the markets are at this point of time. Nilesh, anything that you are catching attention of?
Right, exactly. In fact, I wanted to highlight HDFC AMC, a very good breakout on the chart. In fact, just to give you a disclaimer, we have also recommended this stock to our client as well. So HDFC AMC, we did see a gap up opening a couple of days back, and after that, today we have witnessed another fresh breakout. The structure looks positive. In fact, if you see in last couple of trading sessions, we have seen good volume attraction as well. So HDFC AMC, on the back of a breakout as well as the derivative data also looking positive, we can expect a follow-up on the upside towards 2,900 to 3,000. In fact, that's the positional target. We are expecting 2,900 to 3,000. One can keep a stop loss below 2,650 and it's a buy.
Fair point. 9:39, ladies and gentlemen. The first 20 odd minutes, 20 odd minutes of trade is within us. Heavy selling pressure that we see on Hindustan Aeronautics, now well below 200-day moving average. Nilesh ji, any hope or respite that you see? Series of 2 bad news is coming onto Hindustan Aeronautics. One, of course, was its absence in the AMCA fighter program, and of course now this delay announced of 5 aircraft that were to be delivered to IAF in March of 2025 is now delayed to May of 2026. Nilesh ji, HAL.
Well, structure is looking extremely weak for multiple reasons. First of all, yesterday we have seen huge amount of short build-up, a huge amount of volume have been, witnessed yesterday with huge selling. And also, if you see, it has formed a kind of a rounding top formation. After April 2025, it has given first time it has broken below 4,000 kind of a mark. So, looking at the setup, the momentum indicators oscillators have given a sell crossover. So we may see follow up on the lower side towards 3,800 to 3,750. Structure looks weak and kind of a sell on rise structure. So if you get any pullback towards 4,000, 4,100, that can be used as a selling opportunity, keeping a stop loss above 40 to 50, and 3,800 to 3,750 kind of targets can be seen on the lower side.
Okay, fair point. So that's the structure that you are talking about. At the moment, HAL is the top traded stock. About 666 crores has already been traded, and in terms of how it stacks up in the losers list, it's amongst the top 5. So Timken is down 6.5%, JP Power is down 6.7%, and Hexaware Technologies is down 7%. That's how the structure is at this point of time, ladies and gentlemen. Across the board, there is selling pressure in the metal space. Look at Muthoot Finance. This is a gold finance, 3578, 3.8% lower. To be fair, metals have given a very, very sharp run up, and some of it is now being taken away as far as profit booking is concerned. So that's the state of play, ladies and gentlemen. Coforge days high 1607. Remember all the naysayers who are talking about money going away from IT services. That's the broad headline. But when quality stocks dip, investors come in and provide support. The only gainer at this point of time looks to be Coforge and Persistent Systems. Persistent now almost 6,000. Let's get Nilesh's view on Persistent as well. What are the charts telling you here, Nilesh ji? What you see is almost 5942. This is again a bounce from 200-day DMA.
Well, 200-day simple moving average, if you see, that is placed at 5,758. So that is continues to act as important support. Today, it is breaking below its 100-day moving average, that is placed at 5,977. So overall, structure on immediate basis appears slightly on a weaker side, and we may see a follow-up move towards 5,900 to 5,850. But if somebody is already holding the long position, can keep a stop loss below 5,760 levels, because if it breaks below that mark, then we may see further downtick towards 5,600 to 5,400. So overall, the IT space is kind of looking sideways to weak. So I will not, advise taking any contra bet at present in Persistent. So better wait and watch.
Yes. Persistent and Coforge are amongst the top picks for many mid-cap funds. So it's if you aren't a great trader, it's best not to take a short call on them. Just wait out the selling pressure. And seeing the pain that you are seeing in Hindustan Aeronautics, now you have Mazgaon Dock slipping, you have BEL at 431, and of course BDL also slipping to 1259. So that's how it is, ladies and gentlemen, for the first half an hour of trade. Heavy selling, heavy profit booking, led by weakness in the silver market, spreading across the board in metals. Some kind of support, short covering coming into the IT space. Defense is hit, HAL being the top loser in terms of the defense counters, as also at the moment again the top traded space. Very heavy selling now coming in, 5.8% down. HAL, let me just give you a context on where HAL is at this point of time, and what you see is below even 365-day EMA, and the price was last seen on April 2025. So it's almost 10-month low. That's how it is, ladies and gentlemen. We'll be back Stay glued to Business Today Television.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.